Hey folks, CA Rachana Ranade here and I welcome you all to yet another shoot and release video, and this video is about Infosys Buyback. This is Infosys' biggest buyback amount wise. It's an 18,000 crore rupees buyback. So I'm sure you might have a lot of doubts in your mind, and that is the reason why today we are going to talk about 3 points in this video. Number 1, we'll try and understand all the basic details that you need to know about Infosys Buyback. Very important, we are going to talk about the taxation of this buyback, and last but not the least, very important point, when you are going to take the decision of whether you should tender your stocks for a buyback or not, what points should you consider? All these points we are going to discuss in today's video, so keep on watching the video till the end. But before I show you the actual document which was submitted to the exchanges, one quick and important update. So many people were asking for this. I'm going to come up with a live webinar on finding multi-baggers using AI. It's going to be a fun webinar. All these points, whatever we are going to discuss in the webinar, all these points are very clearly given here. We are going to understand AI tools like ChatGPT, Perplexity, and some amazing features of Notebook LM. What all things we'll understand in this webinar. All points are given here. Please check out the link in the description box and in the pinned comment. Also, if you're interested to learn about stocks, mutual funds, personal finance in a face-to-face environment, we have Har Ghar Investor event lined up in Borivali on 27th of September at 11 AM. And if you want to learn that in Marathi, it's on the 14th of September at 11:30 AM. Seats are filling up fast, so hurry. I'll, as I said, right, all the links, relevant links in the pinned comment and in the description. With that, let's understand the important document which was given, which was submitted to the exchanges. Now, what was mentioned here? See, board of directors have given the approval for the buyback. Very important, there are 2-step approvals. First, board of directors give the approval, then shareholders give the approval, and then it is finalized. Okay, board of directors have given the approval when yesterday, 11 September. And what have they said? That we'll buy back equity shares for an amount of 18,000 crore rupees. Okay, what will be the price of the buyback? Price is 1800 rupees per equity share. What is the current market price? Somewhere around 1530, 1540, whatever. Let's say 1500 rupees. From 1500 rupees to 1800 rupees, that's almost a premium of 19%. But that's what they are agreeing to. Okay. Total percentage wise buyback is going to be 2.41 percentage. Okay, of its total equity capital. Now you can imagine if 2.41% of shares, of equity shares are bought back, obviously what will happen? See, all these shares which are bought back, they are destroyed. So originally when we used to have physical shares, they used to be actually, destroyed. I mean, burn or in a paper shredder or whatever. But nowadays what is done is that they will be electronically destroyed. So what will happen? The number of shares itself will come down. And if that be so, can I say metrics like ROE will improve? Yes, of course. Return on equity, number of shares are itself going to decrease. So ROE will improve. If I'm talking about EPS, EPS is also going to improve. Okay. So I hope this is clear. Board of directors have agreed to have approved this buyback, 1800 per share. Total paid up capital ka 2.41% is going to be bought back. Record date has not yet been announced. They have very clearly mentioned record date is yet to be announced. It will be announced later. Okay, why is this important? See, you will be eligible for this buyback only if you hold shares as on record date. It will be like, if it is not yet announced, if some person were to buy it today, as an example, okay, not a recommendation, if some person were to buy it today, will that person be eligible for buyback? Yes, because record date is going to be at a later date. Fair enough? Yes. Now, this is just an additional point, just in case, because first viewership for our channel comes from India, second highest viewership comes from USA, and that is the reason why I thought of pointing this out. What about shareholders from USA who have American depository receipts or American depository shares? Will they be eligible for buyback? So it's again very clearly mentioned in this document. The buyback is proposed to be made from all the equity shareholders of the company, of course, as on record date, but including those who become equity shares as on record date by cancelling the American depository shares and withdrawing underlying shares on a proportionate basis through the tender offer route. Okay, so what are they saying? You have to cancel your American depository shares and withdraw the underlying equity shares, and then you will have to apply through the tender offer route. If that be so, you will also be eligible for buyback. If you ask me what is the procedure for that, sorry, I have never worked in this area, I have never done this admin work, so I don't know what is the exact route to admin process, but I am sure whoever is your broker, they will help you out. If you are from USA, they will help you out on how to apply for this if you wish to apply for the buyback. As I mentioned, right now only board of directors have approved. How will shareholders approve? The buyback offer is subject to the approval of the shareholders by way of a special resolution, and that is typically done remotely through e-voting. But till date, I'll be honest, whatever number of buybacks I've seen, never ever it has happened that board of directors have agreed and shareholders say, no, amal nahi pahiye buyback, we don't want buyback. I can't at least recall of any buyback going flop in this way. So anyways, I hope all the basic points are clear. I've also noted these points in a basic presentation. Let's just check once if we have covered all. Did I talk about the 18,000 crores issue size? Yes, 1800 per share is the offer price, 2.41% equity will be bought back. We did talk about American depository shares. We did talk, oh, this is one point. It will be done through a fixed price buyback via tender route. It's not an open market buyback, it's a tender route buyback. So basically you will have to fill up the tenders earlier by hand, now with the help of an e-application. Okay. Premium approximately 19%. We did talk about matrices being improved, EPS, ROA, whatever. Record date not yet announced. We discussed about that as well. Very important. How many of your tendered shares get accepted? Let's take an example. Assume you have 100 shares and you offer all 100 shares for buyback. Is it necessary that your entire 100 shares will be accepted? No. A ratio will be decided, and based on the ratio, your shares will be actually bought back. Okay. So let's say, as an example, company says up to 100 shares, we are going to buy back only 10 shares, something like this. It can be even in percentage terms. I'm just giving you an example of slab wise. Up to 100 shares, we are going to buy back 10. Okay. In that case, even though you have 100 shares, not entire shares will be bought back, only a proportion of that will be bought back. The proportion depends, and that will be obviously informed to you by the company. Okay. Now that we know these points, let's come to the second and very important point on what about the taxation of buyback. For this, I have already written down an example for Chandu and Bandhu just to save on some time. Chandu is a rich person, income 30 lakhs. Bandhu comparatively lesser rich, 10 lakhs is the income for Bandhu. So 30 lakhs versus 10 lakhs. How many shares did Chandu buy of Infosys? Assume both have bought the shares today. That is why purchase price I have taken same, 1500. Assume Chandu bought 100 and Bandhu bought 20. Now I have taken the same example, up to 100 shares, only 10 shares will be bought back. Okay. And in that case, for Chandu, 10 shares will be bought back, and for Bandhu also 10 shares will be bought back. By whom? By Infosys. Okay. Assume both had offered, both had given the tender for buyback. Okay. Now what is the buyback price? It is 1800 for both. Okay. Now let us understand. Earlier, this buyback used to be tax free. Okay. Was there any section for that? Yes. If you are interested to know about the sections, I'll tell you sections. And now it is taxed as a deemed dividend, section 222F. Okay, you can see here deemed dividend, section 222F. Now it is going to be taxed. Earlier it used to be tax free, and it used to be as per section 115 QA. Okay, ye kyun hua? Okay, anyways. So now it is taxed. That is important. Now what you will have to do, understand how is the tax treatment done. That is very important now. This deemed dividend, section 222F, deemed dividend, that is treated as your normal rate income. It's not a special rate income. So basically it will get added to your normal income. Like let's say you have salary income, same slab rate wise, your 1800 rupees ka buyback into number of shares bought back will be added as your normal rate income. So tell me quickly, how much is your deemed dividend? 1800 is per share into number of shares bought back, 10, so 18,000, and 18,000 is the deemed dividend. Now Chandu is into the 30% tax slab, and that is the reason why 18,000 ka direct 30%, 5,400 this person will have to pay as a tax. Now understand, this 18,000 is not a special rate income. That's what I told you right now. And his other income or salary income is only 10 lakhs. Assume he has no other income. And that is the reason why, because he is below 12 lakhs. Okay, I'm not going to go into the rebate and all these technical words. I'm just saying this is normal rate of income, normal rate of taxation for this income. And that is the reason why, because he is below 12 lakhs, no tax on that. Everyone understands this now? Below 12 lakh income, no tax. Okay, so 0. Now people will be like, acha, okay, for 18,000 rupees that we got as a buyback, we pay tax on that. But what about 15,000 rupees which we have paid to buy those shares? So now what is the new treatment? We say that this 15,000 rupees, your purchase price basically, 1500 into 10 shares, correct? 15,000 rupees can be treated as your short term capital loss. Okay till here? Now wait, important. Let us assume, very important point, let us assume that both have 15,000 ka short term capital gain. Okay, assume both have 15,000 rupees short term capital gain. in that case, what happens is that, can I set off short-term capital loss against short-term capital gain? Yes, correct. So this short-term capital loss will be set off against this short-term capital gain. Both have 15K. Okay. Now what will happen? Tax saved is how much? 15,000 ka 20%. Because had this not been allowed as a short-term capital loss, he would have been required to pay 15,000 into 20% as a short-term capital gain. So that will come to how much? 3,000 rupees. Same here, 3,000 rupees. Okay. Now if you are like, but his income is below 12 lakh, no, rebates and all that, that will not apply here. This is special rate, 20% is special rate. So here also 3,000 rupees liability will occur otherwise had there been no capital loss. Okay. So in this case, because we have assumed both had a short-term capital gain of 15,000, they'll be able to set this off, and that is the reason why they were able to, we are assuming they were able to save that tax. So what is the net tax benefit? He had to pay 5,400 because of deemed dividend, 3,000 he saved, ultimately he had to pay 2,400 rupees as compared to earlier. Earlier where it used to be tax free. For Bandhu what happened? No tax on deemed dividend because he is below 12 lakh, but because short-term capital gain is special rate of tax, 3,000 he'll save on that, and that is the reason why for Bandhu he got a 3,000 rupees tax benefit. Wow, Bandhu is happy, right? So I hope you have understood that this one is going to be beneficial for whom? Especially for those who are into comparatively lower tax slabs, right? Now let's come to the final point, that if you were to decide on whether you should really tender the shares or not, decision is yours, but what points can you consider? First point you can consider is, if you are a small shareholder, if your holding value of Infosys is below 2 lakh rupees, then your chances of acceptance for buyback is higher. Okay. So if you are a small shareholder, that's a added advantage. Number 2, high income investors, be aware, right now only I told you, entire amount that you receive as buyback, it's going to be taxed as your normal income. So as per your tax slab. So instead of that, if you believe in the growth story of Infosys, if you feel that in the longer term Infosys will perform well, and if you feel that aaj nahi to kal, maybe after 1 year, whatever is the case, it will reach 1800 or even above that, then it would make sense to sell at that time only from a taxation perspective, I am telling you right now. Because in that case, let's say you sell after 1 year, if you sell at, let's say 2,000 rupees, 2,000 minus 1,500, 500 is your capital gain, and you will have to pay tax at the rate of 12.5% only. Right now you are paying at 30% deemed dividend. Okay. So I hope you have understood this perspective as well. Today the taxation part was a little bit technical, I know that. Just in case if you feel that you need to revise, you can just rewind and revisit, replay. You'll be in a better position to understand. I hope you found a lot of value in today's short and sweet video, shoot and release video. Please don't forget to check out the pinned comment and description box, just in case if I fumbled on some words. If you have not hit subscribe to our channel, please do subscribe to our channel. Hit the like button, share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye.